Welcome to today's discussion. I'm Dana.
Hey Dana, I'm Matt. Today we're diving into some of the biggest economic stories making headlines.
Let's start with the Bank of England's decision to keep interest rates on hold. What are your thoughts on this move?
Well, Dana, it was largely expected. The bank is being cautious due to the ongoing Iran war and its potential impact on inflation. They're considering various scenarios, one of which might require a significant increase in borrowing costs.
That's right. The articles mention that the bank is weighing the economic impact of the Iran war, especially with the Strait of Hormuz being a critical oil passage. How do you think this affects the UK's economy?
It's a double-edged sword. On one hand, the war could drive oil prices higher, increasing inflation. On the other, if the conflict escalates, it could dampen economic growth. The bank is trying to balance these risks.
The Monetary Policy Committee voted 8-1 to keep rates steady, indicating some disagreement. Do you think we'll see a rate hike soon?
It's possible. The bank has signaled that rates could rise if inflation risks materialize. With the Iran war clouding the outlook, they're keeping their options open.
Speaking of economic outlooks, the U.S. economy grew at a 2% annual pace in the first quarter of 2026. What are your thoughts on this growth?
It's a modest recovery, especially after the federal government shutdown. The growth was supported by government spending and business investment, particularly in AI. However, consumer spending slowed down.
That's interesting. The articles highlight that business investment rose by 8.7%, partly driven by AI. How significant is this trend?
It's very significant. AI is becoming a major driver of investment and potentially growth. However, we need to watch if this investment translates into broader economic benefits.
The Iran war is also casting a shadow over the U.S. economy. How do you think this conflict will impact the global economy?
The potential for disruption is huge, especially with oil prices. If the conflict escalates, we could see significant economic fallout globally.
Shifting gears to the tech world, Anthropic is reportedly exploring a new funding round that could value the company at over $900 billion. What do you make of this?
That's a staggering valuation, more than double its current level. Anthropic must be making significant strides in AI to attract such investment.
The articles suggest that Anthropic's growth is putting pressure on other AI companies. How do you see this playing out in the market?
It's likely to lead to a competitive landscape where only the strongest AI companies survive. This could drive innovation, but also raises questions about market sustainability.
Let's touch on some European corporate news. There's been a flurry of announcements from companies like Deutsche Börse AG and others regarding voting rights. What are your thoughts on these announcements?
These announcements are routine for European companies, required by law to notify about significant changes in voting rights. They don't necessarily indicate major shifts in company control or strategy.
That's a good point. They're more about transparency and compliance with regulations like the WPHG. Still, they can sometimes signal underlying changes.
Exactly. While the announcements themselves are procedural, they can be worth watching for investors looking for subtle signals about a company's future.
As we wrap up, it's clear that the global economy is navigating a complex landscape with geopolitical tensions and technological advancements.
Absolutely. The interplay between these factors will be crucial in shaping the economic future.
That's all for today's discussion. Thanks for tuning in, and we'll catch you on the next episode.
Goodbye, and see you later.